your mentor would kill in order to be able to trade like me. Because why? I have a 95% win rate. Now, question to you. Am I smarter than you? Actually, no. But do I know something that you don't? Hell yeah, or else you'll be profitable and I will be unprofitable. Now here's a very big misconception. Being profitable is not strategy, it's not indicators, intelligent, and certainly also not SMC, ICT, or whatever other BS that you have heard so far. All it comes down to at the end is really just discipline. Now, what is discipline? Discipline is the ability to stick to one thing and do that consistently until they reach their goal. Such as in here. Now, in case you are wondering why that is not a 95% win rate, is simply because I have multiple backtests. Even I, as the master of a negative versus reward and pretty much the only guy on YouTube that is teaching how to do this, I am not always achieving my 95% win rate. But this is exactly my point. You're trying to be perfect. I am not trying to be perfect, and you don't have to be perfect in order to become a profitable trader. Now, and I actually have seen a few people who tried using my strategy, but they were nowhere near close to actually achieving such a high win rate because their stop loss is just getting hit over and over again. And I get it. That results into you just being demotivated, actually giving it a try. But I've told you earlier, you have to stick to one thing until it actually makes sense. But later in this video, I'll actually cover how to avoid these common losses that you're getting when you're backtesting my strategy. Now, and here's the thing, no matter which BS strategy that you are going to try out, whether it's from YouTube or TikTok, is not going to work. Now, first of all of these different strategies that you're seeing, they don't work to begin with. But let's just say in hypothetical world, they actually do work. Well, then it is also not going to benefit you much because once again, you have to stick to it for a long period of time to actually understand the nuances. Now, here's the thing. You have been told that you always have to trade high probability setups only and by any cost avoid the bad trading setups. Now, this is actually the case and it's true. However, there is something way more important than any of these two. It's actually avoiding the bad days instead of missing a high probability day. Now, there's actually a very big difference between the two that I've just shown you. Why? Because here's the massive difference between trading a negative risk reward and trading a higher risk reward. It's simply that if you're going to win, your win is not going to be as high as your loss. No shit, Sherlock. However, we actually need to understand what that means. That means that if we're going to take a loss, it's going to set us back a couple of wins. That's why it's way more important avoiding a bad day than actually missing out on a high probability day. So let's just say that all of these different trading days are looking good. So you don't know if that one bad trading day is actually bad yet. But also all of these trades, they are not good enough to be called a A++ setup. So rather, I will avoid all of these 4 days altogether just to avoid that one bad trading day. Simply because with a negative risk reward, it's just so much more worth it missing out on a bad trading day than actually missing out on a good trading day. Now, I know that some of you guys are going to start doubting this way of trading, but click on this video and I promise you that it's going to change your mind. But for anybody that is actually interested how to avoid these bad trading days, let me show you. Now, first of all, when you're having something like this, now we are currently on the daily time frame and you can clearly see that we are pushing higher and higher. Now, this on its own doesn't mean much. I really want to ask yourself a very simple question. Where is the next daily candle going to go? Will it shoot for all of these different highs or will it go lower in here? Now, if your answer was that we will go higher, then you would have been completely wrong. And yes, it might seem so obvious that we'll just go for these highs simply because we have already pushed higher and higher. We might as well just go one more time higher. But this is exactly where you mess up because you don't look into the candles. You don't look into the context of the entire framework. Now, later on, I'll show you an example where it's not so obvious on why this trade shouldn't have worked out. But basically, on the daily chart alone, what have we seen so far? We're pushing lower and lower. So now we have to draw our premium to discount. We have actually already hit into it. And now we need some kind of level that is in our premium range. In this case, it's this FEG. From here on, you can expect reversals. And why? Because this is just simply how liquidity works. If we're just trading into one direction and we just keep on going without pausing, then eventually the market just has to return. Exactly what it did in here. We went lower and lower without ever stopping, but eventually the market has to do the opposite. But let's look further into the candle and drop down onto the 4-hour time frame to understand why this has not been working out. Simply because, as you can see, we have an FEG in here. Now, I'm keeping it very simple. I'm not making anything complicated in this way of trading, but this is still not all. Now, what else do we also have? Now, if you're going to look closely, we have relative equal lows in here. We have a swing low in here and another one in here. So these are relative equal lows. Now, and this is exactly where most of you just keep on failing it. You'll be asking yourself, well, but we also have relative equal highs in here. We have a swing high in here and a couple of more in there. This is where context plays a big role. We have already identified that probably we will go lower on the daily chart because we're currently sitting in an FVG. So which one of these is going to get hit? Of course, it's the low. Now, what would most of you just do now? You would just take a trade onto the downside because you have identified that, okay, we'll just go lower and let me put my stop loss above this high, and you're just going to trade it. Now, this can work. In this case, it would have been actually worked out, but this is just wrong. This day was not a high probability to trade. Now keep in mind, this is hindsight. I knew where the price is going to go, but this is a classic example of whether it's going to be short or long, you shouldn't have taken a trade at all. Now this in here is just one of my different backtesting sessions. What have I told you earlier? In order to achieve your goals, you have to do the right things to achieve them. If you want to build a house out of concrete, you're not going to farm wood. Now, even though each and every single of these trades that I have taken is broken down in my mentorship down below with the full journal, but even that is probably not going to make you profitable. Why? Because you're just not able to stick to the rules and actually do what I'm telling you in these videos. Now I know, and I know some of you guys expect to become a millionaire after just trading a couple of days with my strategy. Now, this is not going to happen. Although there have been a handful of students who are actually making a ton of money, but all of that has just worked out because they are just staying consistent and actually doing the right things. Now guys, trading was never really about strategy or anything like that. At the end of the day, it's really just about psychology. A negative RR has actually fixed this trader's psychology, and he has said it himself. Now look, my analysis always starts at the daily chart. I want to ask myself a very simple question: previous day high or previous day low? Now in here, we'll go for the previous day high. And you'll see that after just doing this and identifying which days are high probability and which days are low probability, then regardless of which system you're actually trading, this will skyrocket your profits. So pay attention to what I'm telling you in here. Now, where are we going? Previous day low or previous day high? Probably for the low, but I can't really tell. So I'm not going to take this trade at all. I have no bias for this one. So we're just going to skip it. I also have no bias for this one as well. No bias. So for this one, it's a previous day high. I'm going to zoom in real quick so you actually see it. We have gone for the previous day high. Now there's another thing. You don't have to be right for the entire day because your take profit would never exceed the previous day high in these cases. Look, with a negative risk to reward, you don't even have to be right in order to make money. This is the crazy thing that most of you guys don't understand. Now we're currently looking into the daily candle that I've just shown you onto the daily chart. Now we have gone for the previous day high. You don't even have to be right on the entire bias in order to actually hit a take profit, because all you're really going for is for small movements into the market. That's it. So as you can see, for most of the day, we were wrong. But did we still make a lot of money? Yes, we did. So let's do a couple of more examples. Will we go for the previous day low or high? We'll go for the low. That's it. Simple as that. Do we know for that day? No, we don't, so we're not going to trade it. Previous day high, previous day low, of course, is going to be the high. Now, and here is the difference between me and your favorite mentor who's just cherry picking setups, and he doesn't even know what he's doing himself. He's just taking random trades onto the chart. If it's going to be a win, then it's a win. If it's a loss, then whatever, right? So I'm going to actually pick a random point in the chart. I've zoomed out this much that you can't even tell whether or not we're going to go higher or lower. But just in case, I'm actually going to close my eyes and press on a random date of the chart. So we have landed somewhere in 2024. And I'm basically just going to do a quick backtesting session to get you more familiar what I'm doing basically every single day. So our analysis usually always start at the daily chart. Now, of course, I cannot show you every single detail in just one video, but you'll get the idea pretty shortly. I've previously told you that we pretty much only care if we're going for the previous day high or for the previous day low. Now, in this case, we will probably go for the previous day high and not for the previous day low because we have already established movement onto the upside. What else is there on the daily chart? We have relative equal highs. Now you might be saying, how are those relative equal highs? Because relative equal highs when you have one swing high and another one relative to price, right? Well, but if we're going to go lower, so basically the 4-hour time frame and 1-hour time frame, you will see that this is going to be a swing high. So now we're just simply going to drop down onto 4-hour time frame, and from here on we're going to take even more information that chart is basically giving us. So in here, what can we spot? We have an FVG. Why is this meaningful to us? Because we like to trade into the FVGs and not away from them. No, but this is not all. We also have relative equal lows, and this is the breaking point for a lot of you guys. This is exactly where most of y'all will be thinking, well, I don't really know where I'm going to take a trade on, because we have relative equal lows, but also relative equal highs. Firstly, you have identified well that you're not only going to look for things that are speaking for your trade, but to understand whether we're trading higher or lower, simply just look at the buys that we have done beforehand. We are bullish because the daily time frame is just looking for the upside. So we're looking to trade into the relative equal highs in here. So now we are on the 1 hour time frame. I am going to leave the relative equal lows and relative equal highs in here for now. Now we have this 4 hour fair value gap, and we want to trade into it and then to the previous day high. And simple as that, we're just going to take a trade right at the FEG. Our stop loss is going to sit right at the previous day low, and our take profit to the relative equal highs. That's basically it, what I do every single day. So let's see how is this going to play out. Now we are hovering around the price, and you will also get into drawdown phases. That's completely normal. I'm not saying that you're just going to sniper entry the trades every single time, because this is everything except for looking for sniper entries. Why? Because sniper entries don't even work to begin with. But just in case you don't believe me that trading a 1 for 20 risk to reward doesn't work, then click on this video, and I promise to you that this is going to prove to you that a 1 for 20 risk to reward or anything even close to that is not possible and will never be possible. If you still haven't clicked on the video, and if you want to trade with me side by side, it's in the description down below. Like the video, subscribe to the channel, and see you guys next one.